All right, welcome back everyone to my new YouTube channel, Invest the Rest, where the point of this channel is to cover all my different financial strategies that I'm using in 2025 to get as much extra money into the market as possible, because in my opinion, more time in the market means more money. This is really going to be a great video today. If you're into options trading, I think you're really going to like this. You know, a lot of my accounts that I started in 2025, the option trading account, the high yield dividend ETF focused account, you know, a lot of those strategies have a high amount of risk. But to be honest, it's going really well so far. I really have nothing to complain about. And while everything's going well, and that's great, I am also interested to see in the future how these strategies respond to a down market. But that being said, for today, we're going to go over the options trading of last week, and we are well on our way to my goal of $600 per month. If I switch over to the spreadsheet here, we're going to jump right into it. Before I go through the details, this is not financial advice. I am not a financial advisor, and obviously these videos are for entertainment purposes only. This is a discussion and a presentation of my financial journey, and I always promote everybody doing your own research before you put your money into something that you don't understand. Make sure when you invest your money, you understand what you're investing in. Again, like I said at the beginning of last week, I think in my third options account update video, really sticking to MSTU right now. MSTU has a lot of good premium for weekly selling puts and call contracts, quite a bit of volatility, and I think it's very conducive to the strategy that I'm trying to achieve in this account. So as you'll see, what I'd like to go over first is the week two. What changed in week two? Well, basically, week two ended as pretty much in the best situation that we could ask for. Okay, I had these 5 contracts, the expiration date of 1/17, and we also had 2 contracts from week 1 also expire on 1/17. So we had 7 contracts total. The first 2 MSTY contracts, right? I sold a put and a call because I had previously owned some MSTY in the account I'm using to trade. And so we sold a put contract saying, hey, by 1/17, I will buy at $26. I'll buy 100 shares of MSTY at $100 shares at $26, or I will sell 100 shares at $33. Well, as predicted, MSTY stayed right at $29.89, meaning that for the buyers of my contracts that paid me this premium, it wouldn't make sense for them to have me buy at 26 because they can sell at 29.89, and it wouldn't make sense for me to sell anybody 100 shares at 33 because any buyer of, projected shares could go and buy at $29.89. So both contracts are, they quote unquote expired worthless. That's what the term is called when you're trading options. And when they say expired worthless, that means those contracts expired worthless to the person that bought them, not to us. To us, that's really an ideal situation for this option strategy. So we keep the premium, contracts expire worthless, nothing happens. We don't have to buy and we don't have to sell. So we kept that premium right there, total of around $68, which we would keep anyway. I do keep saying, hey, we kept this premium, we kept this premium. We would keep it anyway, but we get to keep that premium with nothing happening with our shares, without having to put more cash out there to buy shares and without having to sell my MSTY shares. So keep that in mind as we go through this. Down here, week 2, I had sold 2 call contracts, right? Because the 2 put contracts on MSTU from week 1, they did get assigned, right? At $10 and $9.50. So for week 2, I sold call contracts on MSTU. Same strike price because I'm not really interested in capital gains. I don't want to get stuck with shares, right? I probably could have sold. One of the viewers made a comment, I probably could have sold or set the strike price for those call contracts a little bit higher, which would have given me a little bit of appreciation in the share. But I really don't want to get stuck with the shares, okay? So yeah, could I have pushed the limits? Probably, right, with the action on MSTU last week. But I bought them at $10 and $9.50. So I turned around and I sold them at $10 and $9.50. No capital appreciation, depreciation, and then I keep the premium. So that's really the strategy. I want to keep this turnover going. I don't want to get stuck with shares if I push the limit too much on a call contract and then I'm stuck with these 200 shares in week 3. I'd rather be more aggressive on selling more puts, because selling these shares, keep in mind, these call contracts being assigned means that I sell those shares and that cash is now available for week 3 to sell cash secured puts. So over here in the result column, right, assigned, the contract was assigned means the buyer said, hey, I want to buy those 100 shares here in line 10, row 10. I want to buy those 100 shares for $10 a piece. And the reason that buyer enacted that contract is because then they can turn around and sell it for $13.13. Okay, so I'm selling under market price. Same thing for the $9.50 strike price contract. The buyer said, hey, I want to assign this contract to you, which means the contract terms, I have to act on them. And I sell my 100 shares for $9.50 each. Again, I keep all the premium, okay? $90 in premium is mine to keep. So assigned, when a call gets assigned, because that's beneficial for the strategy in this account, I'm going to mark it green because I want my call contracts to be assigned. If a put contract is assigned, I'm going to mark it in red because that's not ideal, right? I'd rather a put contract expire worthless. But if it does get assigned, I'm going to mark it in red. And then when it gets sold via a call, I'm going to come back up here and mark it as sold as a way of keeping track of how many shares I own of each, stock or fund that I trade options on. So that's right now how I'm going to track the results. That may develop over time. I'm open to suggestions. Let me know how you think. What else can I add to this spreadsheet here that would be beneficial to you all? Comment below, let me know. Getting into the last 3 contracts of last week, 3 put contracts, sold them on MSTU. Again, 100 shares each. We retained, let's see, right here, the premium column, $73 in premium, and all 3 put contracts expired worthless because we had a $7 strike, an $8 strike, and a $10.50 strike. That means that's the price I'm willing to buy at. That's the price that the contract dictates I have to buy at. But that doesn't make sense for the buyer because they can sell their 100 shares at $13.13. So they let the contract expire. They lose their premium when they bought the contract, and they get no benefit for it because the contract, quote unquote, expired worthless for the buyer. So I retain that premium. So, I mean, we're all green, very little red. Previous experience in options, I've seen quite a bit more red on my spreadsheets, puts getting assigned, having to buy back contracts early because of massive price fluctuation of certain funds. But, going into week 3 of 2025, we're on a great track. Okay, so what I did Friday, I saw that those contracts were very high. It is very highly likely that they were going to expire. I wasn't worried about additional exposure. All these funds would have had to take a major nosedive to make me worry about covering the exposure in the account. So I decided to sell the puts on Friday instead of waiting until Monday because tomorrow the markets are closed, right? Monday the markets are closed. It's a shortened trading week, and I wouldn't be able to open those puts until Tuesday. And contract premium, option contract premium, is time-based too. So the lower amount of time I have, AKA the 4 days instead of 5, that's going to cut into my premium. But by selling the contracts on January 17th, last Friday, I was able to gain, another day, another couple days of time. And so the premium would be higher than they're going to be on Tuesday. Exclusive of what the price is, right? Specifically at these strikes, you might be able to get more premium based on the MSTU price action. But in general, having more time to trade or more time left on the contract when you sell it gives you a higher premium. The farther out you go, if I sold a contract on MSTU for March 1st, that premium is going to be significant because so much can happen between now and March 1st, right? So you're going to get a more valuable premium for selling that contract. But this account is focused on weekly contracts. That is the strategy. Maybe the strategy will change in the future, but right now that is the strategy I determined for 2025 to see how much money we could make actively trading options on a weekly basis. All right, so next week, what did I do Friday? I sold 3 put contracts. I got a little aggressive. If you look up here, nothing's assigned. We sold our MSTU shares that did get assigned in week 1, and we had no exposure when all of our week 2 contracts either expired worthless or got assigned with the call. That means we had the full $10,000 in our account to sell put contracts. And so I decided to take, $3,300 of that and start selling put contracts on Friday. Obviously not knowing what MSTU was going to do over the long weekend. So it is a little bit riskier, but I didn't do all $10,000. I did $3,300 worth, which I felt was an acceptable risk to gain the additional premium. So we gained an additional $175 in premium, which is fantastic. We sold 3 put contracts for 100 shares each at a strike of $10, a strike of $11, and a strike of $12, right? And that's going to expire next Friday on 1/24. Now, if you look at these 3 strike prices versus last week's strike prices for our put contracts, these 3 strike prices, 10, 11, and 12 for week 3, are much closer to the price of MSTU at close on Friday. Okay. The closer you sell a put contract to the price of the fund, typically the more premium you're going to get. So selling an $8 or a $7 contract with MSTU being at $13.13 wouldn't have paid nearly as much premium. You're probably looking at $10, $15 in premium per contract, which would only yield somewhere between $30 and $45 in premium. Here, because we were a little bit more aggressive with our strike price, we were able to collect $175 in premium. I went up to 12. I almost stopped at 11. I decided to buy that last one at 12 because a shortened trading week also gives the funds less time to go down. And I think with political events or news that's coming up or economic data that's coming out, I think MSTU has a very good chance. I could be entirely mistaken, but I think MSTU has a very good chance at staying above at least $11, if not $12 throughout next week. We'll see if there's any opportunity to buy lower strike price or sell lower strike price put contracts next week. Maybe MSTU dips on Tuesday. I can get in on a $9 or an $8 strike price contract early in the week, and then MSTU will use the week to recover and we'll be able to cash in, an additional 1 or 2 put contracts in week 3. No call contracts in week 3 because we don't own any shares of MSTU. MSTY, I'll have to take a look at that Monday. I didn't want to do it on Friday because of the long weekend. I am going to wait until Monday and see what MSTY is at and possibly open a position on that as well. So that being said, right now as it stands, $458 in premium. We have all next week through the 24th, and then all the following week through the 31st of January. We have 2, other than next week being a shortened trading week of 4 days, we have a 4-day trading week next week and another full 5-day trading week the last week in January. All we have to make less than $150 to reach our $600 goal. I'm ecstatic. I think it's going great. We have a lot of work to do. I have a lot of scrutiny to do on Tuesday with the market shifts. Let's see what MSTU does. Let's see what MSTY does. Maybe I'll take a look at MARA, TSLL, some of the funds we talked about in my very first options video. But I don't want to get too aggressive, okay? Options trading can go bad very quickly, and it's very risky, and I'm not an expert, okay? I've been doing this for a number of years, all self-taught. I don't have a financial educational background. I like to start slow. I'm only going to expose myself to probably $5,000, maybe $6,000 in put contracts for next week. I'm not going to go right up to that $10,000 limit for the account because I need to leave room to get out of it the following week if all of those contracts get assigned. So that's where we stand now. Next week, we'll open some positions on Tuesday. I'll do an update video next week to see where we're at, rolling into that 4th week in January. Again, follow along, comment down below, like the video, let me know what you thought, let me know what I can add to this spreadsheet, let me know what information you guys want to know, or give me suggestions about my trading. You know, I think this is a learning environment. I'm no expert, and some of you out there may have been doing this longer than I have. Subscribe. You'll be notified of new video updates, whether you're interested in options trading or high yield dividends or medium risk growth. I have accounts for all of those different strategies. And as always, everyone, thank you so much for watching. I'll catch you on the next one.